To Trading Capital's exclusive analysis. And today's going to be discussing natural gas and oil. So basically, natural gas has started the week off on the wrong footing. If you're bullish, if you're short, you're laughing to the bank at the moment. Natural gas fell today just under 2%, just under 3%, down 2.84% as we currently speak. So full disclosure, I got stopped out for a break even on my UNG trade today. My average was sitting at 15.96. Our members were able to sell a nice chunk at 17.64, so we did win on the trade. And we just broke even with a stop loss today when it retested that 15.96 high pivot today. But natural gas, honestly, is not looking positive at this moment. I hate to be the bearer of bad news at this point in time, since I was bullish on nat gas and we did make money off of this nice little bounce. But at this point of time, being the fact that nat gas is losing this weekly gap fill, and more importantly, also losing this monthly gap, that's not a healthy sign for nat gas to be starting the week. I do not like the fact that today nat gas actually tried pushing higher intraday, getting above Friday's high pivot, and then it reversed and sold off sharply. So I do not like that type of price action. So therefore, I took the break-even stop loss on the trade. And full disclosure, I do not hold a nat gas position anymore. That being said, I am looking to reload. I do think that since we're losing this 186 level, tomorrow we're going to know more, because tomorrow is certainly market moving event. You have CPI. So if the markets sell off, maybe nat gas catches a bid where we can look to reload on the long side. But at this point, nat gas, technically speaking, is looking like it wants to head for this gap fill around 167. That being said, based off of the RSI price pattern here that is unfolding before us, nat gas could actually make a new low, guys. You know, I hate saying that. There's a lot of people over levered in this thing, but I'm just going to call it how it is to try to hopefully insulate some people for potentially taking a loss in their position. But nevertheless, nat gas is looking like it wants to go lower, just being the fact that we did lose that 186 key volume gap. Now, there's some positives. I'm not just going to be the bearer of bad news and throw all bear stats at you and bearish sentiment. There is some positives here. What's the positives? Well, the positive, if you throw in your 20-day moving average, look where we hit today. You're just retesting the 20-day moving average. So that's a positive sign for the bulls, is that you are hitting daily chart moving average support. The bearish sign is that you're losing the 7-day again. So you're starting to get the 7-day moving average, the short-term moving average, crossing over. And then when you look at the 3-day, you actually had a bearish cross of the 3 and the 7. So that's typically not a good sign. Now, granted, the 20-day is a longer time moving average, so there is some support here, but this absolutely needs to hold. If you lose the 20-day sitting at 180.29, that opens up the gap fill and actually new lows on the session for nat gas. So just be very cautious with this, because there could be a little bit more of a capitulation flush, a little bit more pain for the bulls to come in natural gas at this point in time. Now, if we look at the hourly chart, there is some positives as well on the hourly chart. I'm not just going to be all bear on nat gas. The positives is that you had this little bit of a micro inverted head and shoulders. It's a very small one. This would be your left shoulder. This would be your head. This would be your right shoulder. If you draw your neckline basically from this right shoulder pivot through here, you can clearly see you're just retesting this neckline. So you have your pivot to your pivot to your pivot. This was your impulse breakout here on nat gas. You retested, back tested here. All you've done now is retest that neckline. So at this point in time, that 20-day moving average and this neckline is kind of your line in the sand if you're long. If you lose this and this becomes a failed bearish pattern, you know, you could look for an easy downside move in nat gas just to calculate the downside move. If this bullish pattern fails, you take this high to this low and you drop it to this neckline, and you could see a move down to 156. That would be new lows on nat gas. So again, you lose this hourly chart trend line and that daily 20 moving average, and nat gas will likely be going lower. Again, I apologize about having to be the bearer of bad news, but I've got stopped out for a break even, and that's why you have stop losses. That's why you have risk management, and that's why you take profits when nat gas was breaking out to the high side. If we look at oil, oil had a stunning red to green reversal today. Big technical breakdown intraday, trading all the way down to 76.46, and then a big reversal back to the high side. I still remain bullish on oil Structurally, it's just putting in some consolidation. It seems that every time you dip to that EMA 113 in orange here, you just keep getting bought up. The negative for oil is it did get a close above that. No, it didn't. Sorry. The negative is you got rejected at that daily 200. So you're sandwiched between the EMA 113 and the daily 200. Now, granted, the daily 200 with this recent push up in oil has started to cause oil to slope up. So you would favor oil to climb back above that key area. So oil looking a little bit more bullish. Natural gas at this point looking like it's a little bit vulnerable to potentially seeing some lower price action. On that note, thank you all for tuning in. Please give this video a like down below and check out my tradingcapital.ca Discord, where I run a swing trading and day trading service. We were able to take 4 different winners today. We also had a stellar day in the live day trading room. So please feel free to join the live trading room in the mornings. It's free. We will be live streaming the CPI results tomorrow at 8:30. Take care, everybody. See you on the charts a bit later.